Good morning, trade pros. Welcome to our morning market update for Wednesday, August the 1st of 2018. It's George Papslov, Trade Pro Academy. We got the boys here in the office always. As usual, there's Victorio and Marky. And yeah, the team's here for you guys. We got a huge day in the markets today. Huge. Let me make my hand smaller. Huge. We do have a big day though in the market. We have massive things happening today, and they've all piled on in the middle of the week. And there's going to be a lot of day trading opportunities. So let's jump right into it because we're going to talk about a lot of things today. Talk about the ADP jobs report. We'll break it down for you. What you can expect in the Fed announcement coming up today at 2 p.m. Oil inventory is at 10:30. The usual report. China-U.S. trade relations and how they've soured. And we're also going to talk about Apple's earnings yesterday because they beat, but there's something underneath that headline that's a little worrisome, but also an opportunity as well. All right, so let's get started. First and foremost, Apple's up 4%, almost to an all-time high, actually, almost worth the $1 trillion. Very close. Baidu is up 1.7%, although missing some ad sales growth. Pfizer is solid after a Q2 report, up 3.5%. Procter & Gamble up 0.9%, and Shire 0.5%. So a lot of companies have beat earnings and expectations in the last 24 hours, and that's positive for the market. However, I'm going to talk to you about a few other things in a moment that's going to be a little bit more contrary to that. Get your passports out. We're going to go around the world once again. In Asia, Japan is up 0.9%, and the only green market in the Asian session. Asian equities sold off on the news that Donald Trump will apply additional tariffs. I'll tell you about that in a moment. Hong Kong was down 1%, China down 1.8%. Really big sell-off in Chinese markets. India down 0.2%. In Europe at midday, the selling pressure from the Asian markets transpired into the European markets as well. London was down 1.3%, Paris down 0.1%, and Frankfurt down 0.3 percentage point. So weak pressure as well on the European markets. In the United States, the Dow Jones is down 0.1%. S&P is flat. NASDAQ is also flat. We're seeing that sell-off momentum sort of wash away into the U.S. session. All right, crude oil is down 1.1% inside of the $67 range at one point. And is it still the 67? Where's crude at? Crude oil is at 67.73, so it continues to sell off in that $67 range. We had a really big accumulation or a build of inventory on yesterday's number, and that sets us up for today's oil inventory at 10:30 to be a massive mover. No matter how the report comes out, it'll move in a big way, and we're going to trade that together live in our trading room. So I encourage you guys to check it out, sign up. It comes with the Day Trader Pro and Elite packages. You got a 14-day money-back guarantee. So it's a wonderful time to sign up today so you can trade 2 inventory reports before you decide how to proceed with your membership. But I guarantee you're going to stay on board. I guarantee it. We just offer a lot of value. It's a no-brainer. All right, gold is down 0.1%. Bitcoin's down 2.2%, back into the mid-7,000s. And 10-year Treasury yield is up 2 basis points, back to close to 3% at 2.98. 3% is a really important marker for fixed income markets. Anything above 3% puts a lot of borrowing pressure and cost pressure on debt, and that is a bad thing for equities. It's a marker a lot of institutional investors have got pegged. So back up to 2.98 on the 10-year Treasury. That's important today as well. All right, at 8:15, rolling through. We're going to have to go a little bit faster today. We got a lot to cover. At 8:15, we had the ADP jobs report, and that came out at a whopping beat. It came out at 219,000 jobs versus 186,000 expected, and versus 181,000 prior month number. Now, the prior month number was also revised higher from 177,000. So we got a really big beat according to expectations. We beat last month's number, and we revised last month's number higher. That's a very bullish jobs report. This sets the stage for a really big Friday morning. Friday at 8:30 in the morning, we have the more important non-farm payrolls figure. That's key. The Federal Reserve watches that. Institutional traders watch that. Everyone, economists watches that. Analysts watch it. The grandma waiting to get on the bus to get to her grandson on the weekends is probably also watching that report. It's a huge one. So I love grandmas. Grandmas are the best. They really have a lot of knowledge. We should learn from our grandmas. All right. So, I mean, that's a little bit of a detour. ADP jobs report beats in a big way. That's what you have to know today. Looking at some of the constituents or diving deeper in this number, small business added 52,000 jobs versus 29 prior month. Medium business added 119,000 jobs versus 80,000 last month. Services sector up to 177,000 jobs versus 148 last month. And manufacturing is also up to 23,000 jobs versus 12 last month. That's a beat all across the board. This is as strong of a jobs report as you can get. All right, so really positive numbers at 8:15. At 8:30, we had the Treasury announcing their quarterly fundraisers, and they have a $34 billion 3-year auction that's going to be coming up, $26 billion 10-year note, and $18 billion 30-year bonds, looking to raise around $37 billion to pay their government operation costs. All right, so we got a lot of news. Today at 10 a.m., we have ISM Manufacturing Index. We have the construction spending at 10 a.m. as well. And the most important is 10:30 oil inventories. We love that number. In just 1 hour and 1 week, you can make your full weekly income. And even if you have a really high-paid job, you could still beat that within 1 hour and 1 week just trading oil inventory. That's why it's so important that you join today and check it out. At 2 p.m., we have the FOMC announcement, which is the Federal Reserve, and their latest interest rate announcement. I don't think they're going to hike, but I do think there's some things to watch for there. We'll cover that in a moment. Okay. Let's talk about why the market sold off a little bit from yesterday's close. At around 6 p.m. Eastern last night, Donald Trump came out during the day. First of all, before the opening of yesterday's session, there was talks that U.S. and China are going to get together and start to negotiate and avoid this escalating trade war. And then at 6 p.m. that same day, Donald Trump says, screw it. What we're going to do is instead of putting $10 billion or 10% tariff on $200 billion of goods, we're going to up that tariff to 25% on the $200 billion goods. That's a reversal of the sentiment in the morning. So that sentiment carried the markets higher. Last night, Donald Trump goes out and says this, and it goes against what the Bloomberg report suggested, that China and the U.S. are going to start working together, and the market sold off. That's a significant increase, going from 10% to 25%. I think Donald Trump is trying to pressure China into negotiations, but this number so far is bearish. It's a very bearish announcement. So this morning, it's such a busy day today in economic news that some news is going to say it's a bullish scenario, some's going to say bearish scenario. That's why today, despite the fact there's so much economic data coming out, you can't have a bias. You can't come in here believing the market's going to go up or it's going to go down. Stop believing, start looking at what the chart's telling you, and trade the momentum that you see. Day traders, you're going to have a whirlwind of opportunity today. Swing traders, it's going to get choppy more than likely. It could be a frustrating day for you. So tighten those stops. Take some profit on positions if you got it. We got a lot of unknowns coming up in the next 12 hours. All right. The Federal Reserve at 2 p.m. today is not expected to raise interest rates. They usually raise them on quarterly announcements. So that's middle of the month on March, June, September, and December. And they're not expected to raise rates today. What they are expected to talk about, however, is the sentiment going forward. Are they going to raise more? And what are the odds for a raise in the next meeting upcoming in September? That's what we're really looking for here. There's a lot of disagreement between FOMC members on whether or not they should continue to hike rates at this pace because of the flattening yield curve, all right, and increased borrowing costs already. Basically, they've been raising rates on the Fed level, but rates have naturally on bonds and other instruments already gone up more than they have raised. So we've already factored that in. That's where a lot of the disagreements come into play. So the FOMC meeting today is super important. There's more than likely almost a 99% chance there's no hike. Jerome Powell does it on quarterly meetings, but look to see the tone of the Fed speakers and how these meeting minutes looked. Were they hawkish or dovish or somewhere in between? If they're hawkish, higher interest rates, that probably won't be good for markets. It'll definitely be good for a strong US dollar, and gold will sell off. If the opposite happens, which is dovish, gold will rally, dollar will sell off, equities should also rally. It's important to note here that equities have the most chop and sideways movement and uncertainty in these announcements. The dollar and gold move a little bit more. They make a little bit more sense when they move. Equities, you kind of got to ask a few other questions as well. So that's what's happening. The Federal Reserve at 2 p.m. We're going to wait to see that report as well. We're going to trade that live with our elite members. So members in the trade room as well. The elite guys have a voice chat room for elite members that they talk and trade. They use that room to trade a lot in the night hours and the after hours. We're going to be joining the TRADEPRO Academy team at 1:45 p.m. that room and trading with our elite team on the FOMC meeting minutes and announcement. All right. Last but not least, let's cover Apple here in 2 minutes or less. Apple's very close to $1 trillion market value, and that's huge. Yesterday, shares rose over 4%. Really strong results for the third fiscal quarter. They posted beats on earnings per share. Average iPhone selling price was higher, and they reported $9.55 billion in services revenue. That's their Apple Store, iTunes, and their cloud services and storage. That's a jump of 31% from a year ago. That's a massive increase in their services business. And that's where all the traders got excited. They said, hey, the services, Apple's transitioning to a services company. It's doing great. And that's what rallied the stock price higher. However, you're going to be surprised to find this out. They missed on their iPhone sales. An expectation was for 41.3 million units. Sorry, expectation was 41.6. They actually came out at 41.3. iPad sales were expected at 11.7. They came out at 11.6. Mac sales, I don't know who uses a Mac anymore. I mean, I guess like the Mac, the desktop PCs, I guess studios and video editing companies obviously will use a Mac hardware, a little more higher powered. But anyways, Mac sales 3.7 million versus 4.3 million accepted or expected. That's the lowest level since the third quarter of 2010. So here's what's happening at Apple. Their hardware sales are declining, and their their services sector, rather, their services offering is increasing in revenue. So you're getting a drop of hardware while you're getting an increase in services. That's a transition in their business that hasn't been the case for a long period of time, but their iPhone sales are still their core numbers. And here's what I'm here to tell you. The iPhone sales have peaked somewhere in their low 40s. They've ranged in the low 40s since the third quarter of 2016. So it looks like the iPhone headset units are reaching a maturity phase and, in fact, slowing down in sales, but they're offsetting that with service sector or services provided revenue. And that's an interesting shift in Apple. The big question is, can that continue? Will it continue? I'm not saying bet against Apple, but I want you to know that despite the fact they've beat earnings, there's a fundamental shift going on in the stock. And the question will be, can that continue? And will their business continue to grow there? How much is their services sector worth if they have a declining hardware unit? If you're not using an iPhone, are you going to be uploading pictures to the Apple cloud, right? Are you going to be using iTunes? Those are the questions that we're asking as investors. I'm going to finish it off on this. I'll tell you this much with Apple. Apple's designed their ecosystem to be very restrictive. If you have an iPhone, it works everything good with other Apple products, but outside of that, it's pretty much a brick. You know, it could be you could use it to open your door and as a doorstop. But if hardware sales, that's a great thing to keep people in the ecosystem and keep revenue within the company. However, what would happen if people started to or opted to switch to other devices, right? Because that tie helps when your company is growing, but also hurts you when your hardware units are dropping off. That's kind of the challenge for Apple for the long term. That's more than enough for you guys today. I was writing this morning market update. I'm like, goodness gracious, how am I going to get through this? But I did it. So if you need to rewatch it, go ahead and click the slow down button, and I could talk slower for you. Vic, anything else you want to add? Victorio's yawning over here. Let's turn around and do some levels and put him on the mic. You ready to go on the mic? Dope. All right, we're going to have a big day ahead of us. Manage your risk, trade like a trade pro. I can't really tell you if it's going to go up or down. Just watch it. I do see some bearish pressure early on. Sell rallies early, but look to reverse that. And there's huge announcements coming today that are definitely going to change market sentiment. So just watch. Don't try to guess. Just watch today. Manage your risk. Trade careful. Trade like a trade pro, and you'll come out on top. See you guys tomorrow. Goodbye. Have a great day. Whee. All right, trade pros. A little yappy there on YouTube. Now you know what to expect for the rest of the day in the trading room.